what we're gonna do today, I wanna kinda go over, once again, those tax rates for, we're looking at Social Security and Medicare tax here. In this particular chapter, I wanna go through those tax rates once again, for FICA taxes and FICA taxes. I also have, a sheet, where is it? Oh, I think it's this one here. That I want you guys to work on some different scenarios to give you some practice on doing those calculations. We're also gonna start talking about this additional Medicare tax, which is kind of an obscure topic for a lot of folks. This additional Medicare tax is only applied on wages in excess, earned income, I should say, in excess of $200,000. So whereas we had that wage base with Social Security of $160,200, and we stopped taxing income above that point, now we have, it's not a wage base, but it's sort of a floor where once we reach 200,000, we have to add an additional tax. So we kind of have three components here. We've got our regular Medicare tax of 1.45% if we're talking about just the amount that's withheld from paychecks. Then we have our Social Security tax, which is withheld on wages up to $160,200. And then we have this additional Medicare tax that starts to be imposed on once wages reach 200,000. So we kind of got three different calculations that we have to do in total for these FICA taxes. So we'll go through that and do some. That's when we'll do some of those calculations. Then we need to. Sorry, it's not a touch screen. I can't just scroll it while I'm talking. Then we need to start talking about, once we know how much to withhold from paychecks, now we need to talk about how then do we remit that to the IRS. And we've got some forms that we're going to talk about with regard to reporting the amounts that have been withheld, as well as the schedule for when we withhold those, or when we make payment on those amounts that have been withheld. So we'll probably, we may or may not get to this part today. If not, that's no problem. We can finish it up on Thursday. We've got plenty of time, but that's what I want to cover in today's class. Any questions before we get started? Okay. So I'm gonna probably actually gonna go ahead and use this guy back here rather than the whiteboard, because I think this may be, when we talk about the Social Security, Medicare, this may be a little bit easier. Fortunately, you see my terrible handwriting anyway when it's up on the board. So remember, for Medicare taxes, we've got two parts. We've got the employee rate, and these two together multiply equals our tax. So that base, in this case, is the amount of taxable wages that are subject to Social Security tax and that are subject to Medicare tax. But this applies for all taxes. If you think about even like property taxes, your wage base for property taxes is the value of the property. The rate is then whatever the assessed rate is that the state applies on that property. So if your property is valued at $100,000 and the rate is 5%, you're going to pay $5,000 in property taxes on that. Same thing for sales tax. But your wage base is the purchase price of whatever that item is that you purchased that is subject to sales tax. So if you buy something for $100 and the sales tax rate is 7%, the tax then is going to be $7 of that item that's going to be added on. Same thing applies with income taxes, except here we're talking about what our taxable income is, and that's our base. So our base in this case is applied to taxable wages. For Social Security, that wage base stops, right? It's going to start at $1 and go up to $160,200. After that point, there is no wage base on income. But still, for that individual, they're still going to pay tax on that first $160,200 of income because they still have that wage base that has to be covered, right? So just a little, some basics there about for any type of tax. That's how it works. So we're looking at, let's do an example here. So let's say we have an individual who makes $150,000 on an annual basis. So for Social Security purposes, they have not reached that $160,200 wage base. So all of their income is going to be subject to Social Security tax times our rate, and we'll just look at it from the employee portion, the amount that's withheld. For Medicare taxes, again, same thing, all $150,000 is going to be subject to that Medicare tax of 1.45%. So again, here's our calculation, base times our rate. Get my calculator out here. So 9,300 for Social Security taxes. And of course, this is a pretty simple example. 2175. So our total taxes together, our total FICA withheld. Now, obviously, this is on an annual basis. When you're actually doing payroll, you're doing it on a per payroll basis. How much has to be withheld for that particular payroll? So in total, this person who's making $150,000 is paying $11,475 in combined FICA taxes. Different example, let's say we've got somebody that's making $175,000 annual. Again, our wage base for Social Security purposes, though, we have a maximum $160,200. For Medicare purposes, we do not have a maximum. So now our wage base for each of these taxes is different. Our tax rate is also different for them, and we have that in this example as well. So this individual who made $175,000, the most that they're going to pay in Social Security taxes for the year, it's going to change every year, $99.3240. services though, all 190,000 is subject to that tax. So you'll see this individual who made 190,000, they're gonna pay the same amount of social security tax over the year as the individual who made $175,000, because that wage base is the same. So for 2023, this is the maximum amount that an individual is going to have withheld for social security tax. Medicare taxes, however, are going to be different. So $2,755. So obviously, in total, they're paying more in FICA taxes overall, but it's only because that the additional amount of income is subject to Medicare tax. $12,687.40, even though they made an additional $15,000. All right, so let's look and see what happens with that additional Medicare tax. See all of this here. All right, so now let's look at an individual who's making $225,000 annual. And you can't see that. Now we've got Social Security tax, Medicare tax, and because they made over $200,000 during the year, we've got an additional Medicare tax. It's still Medicare tax. So when your problems ask you for the total amount of Medicare tax, if that individual has a salary of over $200,000, you're gonna combine those two. You're gonna combine the regular Medicare and the additional Medicare, unless it asks you to separate it out. Does that make sense? Okay. So, what is the base gonna be for Social Security? For this individual?
This 160.
160,200, great, that's not gonna change because it's over 160,200 times 6.2%. Medicare, how much of that 225,000 is gonna be subject to regular Medicare tax? All of it. Now, the additional Medicare tax, remember, that's only on amounts over $200,000. So only 25,000. The base for the additional Medicare tax in this case is gonna be 25,000. That amount over 200,000. And the tax rate is 0.9%. Now be careful. Because when you're multiplying, you're going to say, you're gonna take times 0.009. It's very easy, and I see this mistake often where students will accidentally use 9% instead of 0.9%. So just kind of a heads up on that to be careful. So, our tax for Social Security is gonna be the same, 99.3240. Now for Medicare tax, $32.6250. $194.90. The employee is paying $13,419.90. So in total, $26,614.80. On that $225,000 annual salary. Questions about that? Okay, so as I had mentioned, though, we don't withhold taxes on an annual basis, we withhold them on a per pay period basis, right? So for those individuals who reach the Social Security wage base at some point during the year, or they reach that additional Medicare tax rate during the year, we have to know when that happens so that we can change the tax that is withheld. I've got up here something to help you guys out when this happens. And then we'll use this to, I should know. I think I had drawn your attention to this. Steps to calculate the current period FICA. All right, let me go up to the screen, up to the. We'll keep this up, and we'll do some problems up here on the board. This, do it over here. All right, so when this happens, when you need to determine, and these steps apply whether the person has met the wage base or not. It could be under the wage base, it could be over the wage base. These steps will still help you to calculate what the current period FICA is that has to be withheld. Remember, we're withholding this on a per pay period basis. This calculation, though, as I mentioned here, does not take into account additional Medicare tax. We can add that little wrinkle in when we do some problems. So, first thing you want to do is calculate that. Let's say we've got an employee that has prior year-to-date earnings of $156,000. So up to this pay period, they've earned $156,000. During this pay period, current, let's say they earn $10,000. Taxable wages. We've done that. We've done the calculation. We figured out this is what their taxable wages are for this pay period. So, calculate the prior period year-to-date salary up to the current pay, not including the current pay. We've got that amount here. Calculate the OASDI wage base minus the prior period year-to-date salary. All right. So I'm going to put the current period over here to the side. So we've got our Social Security wage base. I'm gonna abbreviate it. SSWB. 160, 200. So calculate the OSD. Oh, I'm sorry, I did it the opposite way. I need to subtract this from the wage base. So we're going to subtract that amount from here. 4,200. If the result is 0 or negative, then there is no OASDI tax during this pay period. We'll do an example where it shows that. If the result is greater than 0, continue to step 3. To calculate the current pay period OASDI tax liability, multiply the OASDI tax rate by the smaller of the result in step 2, 4,200, or the current period total wages. this case, the smaller of those is 4,200. And you can logically think this through, right? If they made $156,000 up to now, and we're adding another $10,000 during this pay period, that's gonna get them up to $166,000. They're over that $160,200 at that point. It's just that we have to figure out how much of the wages are over and above the $160,200 during this pay period. This calculation allows you to do that, to find it. Does that make sense? Because they're now at, look, if we're, so currently, current year to date, that was the prior year to date. Current year to date is the 156,000 that they made before plus 10,000. Now they're at 166,000. They're over the 160,000. That means that if we were to take the 160,200, subtract it, that means that, what is this, 5,800 of their wages are over and above the 160,000 for the year, 160,200. This amount is not taxable. What this calculation does up here is it gives you the taxable amount. If you add those two together, you'll get $10,000. Does that make sense? Okay. So just kind of to take you through the logic of how this calculation works. So, oh, this whiteboard is awful. Some of the whiteboards in these rooms are just absolutely horrid. Whoever ordered them needs to be reprimanded. All right, so calculate the current period OASDI tax liability, multiply the OASDI tax rate by the smaller of the result in step 2 or the current period total wages. Well, the smaller is 4,200. So we'll take the 4,200 times the OASDI tax rate of 6.2%, and somebody's gonna have to do that math for me because I don't have my calculators there. $2,604. This is our current period.
That can't be right. That can't be right. That's over half of the money.
Yeah, you're right. That can't be right. 6.2. So 6.2%. 260. $260.40 for the current period OASDI tax. Okay. That's how much is going to be withheld then from this pay period. What's going to happen next pay period? Let's say this isn't the last pay period during the year. They've got another pay period, and they earned another $10,000. How much of that $10,000 is going to be subject to OASDI tax? None of it. Right? They've already paid it. They reached that wage base during this last pay period. So any subsequent pay periods, there's going to be no Social Security tax that's withheld. Okay? Medicare tax, however, we don't have to do all these shenanigans because the entire $10,000 is going to be subject to Medicare tax. So for Medicare, here's our current Social Security. Medicare, $10,000. I think I can do this in my head, times 1.45%, $145 of Medicare tax. And then the next pay period when it's 10,000 again, is going to be 145 again. Let's do another example where, let's change things up a little bit. how this works for regardless of what that wage level is. So let's say we got somebody who prior year to date, they made 50,000, and the current wage is 2,500. Okay. So we've got the prior period year to date up to the current pay. Calculate the OASDI wage base minus the prior period year to date salary. All right, so 50,000. Oh, sorry, I'm starting with the wrong number again. 160, 200 minus 50,000. And was it 110? 200. All right. If the result is 0 or negative, there is no OASDI tax during this pay period. Well, it's not 0 or negative. Skip to step 4. If the result is greater than 0, continue to step 3. Calculate the current period, pay period OASDI tax, multiply the OASDI tax rate by the smaller of the result in step 2, or the current period wages. Smaller of that is 2,500. So all of that 2,500 is going to be subject to Social Security tax. Makes sense because they're way under that Social Security wage base, right? Again, all of that 2,500 will be subject to Medicare tax. So let's do another one. Let's say their prior year to date is 175,000, and the current is $10,000. Go through the steps again. Take the wage base minus the prior period year to date salary. 160, 200 minus 175. Oh, well, now we're into negative territory. Here, what is it, negative 14,800, is that right? No. Something like that. If the result is 0 or negative, then there is no OASDI tax in the current pay period. Result is 0, or I'm sorry, result is negative. So, none of this is subject to OASDI tax. Makes sense, again, because we were already in excess of that wage base. Right? Yeah? Okay, I see some nods. That's good. Use this. It's helpful. It's helpful for me. All right. So, up there for your assistance. Questions about that and how that works? No? All right. And you do have homework problems. I know that how you go through this. The steps, they do it a little bit differently than my steps that I put together. I think for me, I think following the steps is a little bit easier. But this one's, I guess this one's presented a little bit differently. So Tamara earns $165,000 a year. She's paid semi-monthly on the 15th and the 30th. Determine FICA for the December 30th payroll. Okay, so this is an additional calculation that you have to do because you have to figure out what that year-to-date salary was up to this payroll. They haven't given you that information. I gave that to you in the examples. So she makes $165,000 a year. We have to annualize, so there's her annual salary. Figure out what she makes on a per pay period basis. 24 pay periods, that's going to be important. That's semi-monthly. If it was bi-weekly, this amount would be different. Semi-monthly pay period, she makes $68.75. How many payrolls were run before the December 30th payroll? Well, this is the last payroll, so 23 were run up to the. Sometimes you'll have to really think about that because if they said up to the October 15th payroll, then you might have to do some math, get your figure it out. So before today, she made $158,125. If we can use our steps at this point to figure out $158,125 is what she did prior period, prior year to date. Take the wage base, subtract it from that, so 75. And is that 2075. There's our step 2 result. Our current pay period is $68.75. That's our current step 2 result. This one's smaller of the two. So we'll take the 2,075 times 6.2% to get her OASDI rate. So we can still use those steps in figuring this out. Okay. Sorry, a lot of walking. Those of you in my income tax class, I do a lot of walking in that class too. It's set up the same. So, same sort of calculation here, presented just a little bit differently. So 160,200 minus 158,125, we get that. So calculate it out. 128,665 OASDI tax is that total amount for Medicare tax. Though the entire 6875 is going to be subject to it. All right. Total FICA, we're going to be adding both of those together. And then the employer is going to pay the same amount. Excuse me. Notice that for the employer, their OASDI liability also ends when that employee reaches $160,200. They don't have to pay any additional tax either at that point. After that point, Pardon me. All right. Now let's look at Sambit. Unique names. $225,000 a year, paid monthly. So on a monthly basis, $18,750. How many payrolls? And this is the November 30th payroll. All right. Prior to the November 30th payroll, 10 payrolls were run. We went through October and it's on a monthly basis. So prior period 187.5. We're negative now. So because we're negative, nothing would be subject to OASDI tax during this pay period. And they haven't reached that 225 yet. So during this pay period, we don't have to worry about, or they haven't reached the 200,000 yet, right? During this pay period. Well, have they? No, wait a minute, I'm wrong. Now we have to figure out how much of the current pay, $18,750, is going to be subject to the additional Medicare tax. Because it is during this pay period that they reach that 200,000 threshold, right? All right, so for OASDI, nothing is going to be taxed, but now we've got Medicare tax and we've got additional Medicare tax that we've got to calculate. All right, Medicare tax, that's super simple, right? We're just going to take the 18,750 times the tax rate of 1.45%. Then we have to calculate the additional amount over and above 200,000. So what we've got to do is take our total wages this pay period. So we were at, was it one? Whoever thought this configuration for a classroom was a good idea. So we were at 187,500, right? Prior period. Current period. 18,750. So now they're at 206,250, and they reached that point. So they reached that $200,000 mark during this pay period, which means some of that current pay is going to be subject to that additional Medicare tax. All we have to do here is just subtract the 200 to find out how much. That's the amount that's going to be subject to the 0.9%, 0.9% additional Medicare. Regular Medicare is going to apply to all of it. Add those three together, you get the total amount. Questions? You think you can do it? All right, prove it. Actually, what I'm going to do is, let me go through some of these, go through this first, because there are a couple of questions on that, on the practice sheet that I want you, that have to do with self-employment income. So what happens when you've got somebody who has wages and self-employment income? So remember, when you're self-employed, you've got to pay both halves. But these caps, like the wage base and the additional Medicare tax, those thresholds don't change. It counts toward all of your wages for the entire year. So if you've got someone, actually let me start with a simpler scenario and then I'll get to the self-employed. What if you've got somebody who has 2 jobs during the year? So in job 1, they made $100,000. And then, middle of the year, they switched. Job 2, they made another $100,000. In each of these individual jobs, they did not reach that $160,200 threshold. But combined, they did. And remember, those thresholds apply on a per person basis annually. So, what happens in this case is the employer for job 1, I should say employer 1, but employer one is going to withhold on all of that $100,000. So the employee is going to have to pay the 6.2% for Social Security tax, 1.45% for Medicare tax on all of that $100,000. They switch jobs, employer two is going to have to do the same thing. But the employee has now paid too much in Social Security tax, right? Because now they've paid tax on the total amount. When they file their tax return, they will get a refund of the excess Social Security taxes that have been paid. There will be a calculation that's done on the tax return that figures out, because they've what, $38,800 of income has been subject to Social Security tax that shouldn't have been, and they've had withholding on that. The employer, however, does not get that benefit. They still have to pay the total amount of tax. Okay. So for the employers, it is on a per employee basis, but they don't know how much that employee made in the next job. They have no idea about that information. So there's no way for them to seek any refund on that. So this is where somebody has two W-2 jobs. We call those W-2 jobs. You guys have most of you, I think, have received a W-2 at some point in your life. So we call those W-2 jobs where it's employment. 1099 jobs or independent contractor positions are the ones that are subject to that FICA tax. So just a little bit of information on the FICA tax. So self-employed tax is paid if net earnings exceed $400. So if your net earnings from self-employment are less than $400, you actually don't have to pay self-employment tax. So try and keep your net earnings under $400. What are net earnings? Well, they're not gross earnings. You get to subtract expenses from that, right? So you start with your gross earnings and then you can subtract your expenses. So if you made gross $100,000 and you had $99,801 or $701 of expenses, I guess $601 of expenses, then you're at $399 in net earnings, right? Then you don't have to pay self-employment tax. Total net earnings mean net income plus, if you're a partner in a partnership, partnerships are considered to be self-employment income as well. We cover that a little bit here, not a whole lot, but you do have some problems in your homework that involve partners. So you'll have, and they're asking you how much should be withheld, but there's two partners there. So you do have to know that partners are considered self-employed, which means the employer isn't going to withhold any Social Security or Medicare tax for the partners, only for the employees. Partnerships can have employees. Partners are the owners of those partnerships, okay? They cannot be employees of those partnerships. So anyway, so that's why I just want to explain why they're talking here about the distributive share partnership income. If you own more than one business, you can offset the losses in the income and calculate the self-employment tax based on combined net income. That's pretty cool. If you have $100,000 of net income in one business, but you have a $50,000 loss in another business, now your net income is $50,000. So you can combine all of those together. So form as many businesses as you possibly can, but not just for tax purposes. Again, that FICA tax combined rate, which we already went through, 15.3% plus 0.9% for the additional Medicare if the net earnings exceed $200,000. You can have wages from a job and you can have self-employment income as well, which happens frequently, right? You might have a day job and then you've got a side hustle where you're doing some work. Maybe you've got a little crafting business, or you've got another job a business that you're building up, or maybe you drive for Uber or something like that, which is considered a 1099 self-employment income. In that case, you've got both. Both of the income from both calculate or included in that $160,200 cap. Okay, so you got to combine. When you're self-employed, you get credit for the amount that you earned in your W-2 job. Okay, so let's look at an example of that. And like I said, I wanted to go through this before I give you these practice problems, because a couple of practice problems deal with this. Okay, so here's Celia. So Celia, this is pretty easy in this example. Celia has wages from her job of $170,000. Her self-employment income is $15,000. So she's already reached the cap with her W-2 job, right? That means she isn't going to have to pay any self-employment tax, OASDI part of her self-employment tax, on the $15,000 that she earned herself. She's saving 12.4% in taxes that she's not going to have to pay on that $15,000. So she's already capped on those wages. So all we have to calculate for Celia is the Medicare tax. And she's not to $200,000, so we don't have to worry about additional Medicare tax. So for her, we're just gonna take the $15,000 times 2.9%. Remember, she's gonna pay both halves of that. That 1.45%, she does have to pay both halves of that tax. So her total self-employment tax, or total FICA tax, is $435. Again, that's because most of that, all of that $160,200 wage base was absorbed through her W-2 job. Things aren't always quite so easy though. Preben, again, these names, they're weird. Preben's wages from his job are $68,250. His self-employment income is $94,500. How much is his FICA on the $94,500? I've got some steps I'll show you the steps as well that I have for doing this calculation in Canvas. So it's the amount between his wages and the wage base that he's going to have to pay tax on. You can see combined $68,250. What was it, $94,500? So in total, he made $162,750. He's over that wage base. That means that some of that $94,500 is not going to be subject to self-employment tax. So the amount that would be due that he has to pay is $91,950. And what they've done here is they've just taken the wage base minus the W-2 wages that he earned. That's the additional amount of Social Security tax earnings that are going to be subject to Social Security tax. Okay. So in his case, all of that is going to be subject to Social Security tax because it's less than what he earned. So 12.4%, so he's gonna have to pay an additional $11,401.80 in Social Security tax on that $94,500. In addition, he's gonna have to pay $2,740.50 in Medicare tax. So, and this is before we get to income taxes. He hasn't paid 1 cent of income taxes yet. His FICA, total FICA is, I don't know why they're calling it FICA. His total SICA, $14,142.30. I should say SICA because that's the amount that he's paying. His employer also paid, right? He paid 6.2% Social Security, 1.45% Medicare, and then the employer paid the same amount on that income. Let me show you. Excuse me. I'm fighting a cold. I've been fighting a cold all weekend. That's how I spent my weekend. Steps to calculate FICA and SICA. So first thing you want to do, calculate the FICA on the W-2 wages only, if that's part of the problem, if you have to do that. For the homework problems, you'll just calculate the employee portion. They don't ask you for both of them. calculate the Medicare tax on total self-employment earnings. So his self-employment earnings, $94,500, is all of it's going to be subject to Medicare tax. Subtract the wage base from the W-2 earnings and calculate the full FICA tax on that portion of self-employment earnings. So, which are kind of the same steps. I don't like my steps here. I should refine these, be a little bit more specific. It's essentially what they did on the slide, but excuse me. Full FICA tax on that portion of self-employment earnings that are